What is up, everybody? Welcome back to another episode of Bitcoin and Markets. My name is Ansel Lindner, and on this show, we talk about all things Bitcoin macro. From a contrarian perspective, I'm more in the deflation camp than the inflation camp. So, this is definitely a unique show in Bitcoin and pretty unique in all of macro. There's just a few other people that have a similar viewpoint to myself, but I've been relatively accurate over the last few years, all the way from 2016 when I started the podcast, being the first person ever to say that the user activated soft fork would be how we got SegWit, and calling it correctly all through the scaling debate, into COVID, what we've seen since COVID, a spike in prices, not necessarily inflation, and now a crash in inflation, all along calling it correct. So welcome to the show. Welcome. I'm live streaming on YouTube, Twitter, Twitch, Telegram. Telegram is my home base. So check out t.me/Bitcoin and Markets and check out the website, bitcoinandmarkets.com. Let's go into sharing the screen here. So today I want to talk about the price over the last 24 hours, as well as this Gary Gensler story. The news cycle has been a lot slower over the last few days. And so this Gary Gensler video resurfacing, we're going to watch it. And actually, we're going to watch two videos of Gary Gensler. And it just has caused a big controversy in the space. You can tell that the altcoiners are very tense right now, and they're just latching on to anything. But let's start with the chart, and let me throw the moving averages on here. Yesterday, I did release the premium newsletter, Market Pro number 13. So if you go to bitcoinandmarkets.com, you can sign up to get that premium newsletter. I was talking very heavily about this 50-day moving average and why it is so important. I'm going to send this off to my guys over on Telegram since they don't have screen share. So you can see this 50-day moving average is very important. I was comparing it to the dip here in early March on all sorts of indicators, from the TD sequential to the Ichimoku cloud to the RSI to these moving averages, everything, and everything was lining up pretty dang spot on to have a replay of what we saw in early March. However, it would have been quite different because we zoom out here and we go back to the all-time high. And I had a rectangle on there. I'll draw another rectangle to show what I'm talking about. This section right in here, we were in a very similar position where the price was breaking down below the 50-day moving average. So we had bounced up, come back underneath the 50-day moving average, bounced all the way to an all-time high. Then we broke that 50-day moving average and we started down. Very, very similar to what we see today. Here, I'll draw an arrow so you guys can follow along. So here is the bottoming in July of 2021. We broke out, kind of went back through the 50-day moving average, and then came up and rounded that all-time high top. And we're seeing pretty much the exact same. We bottomed down here in December, popped up at the beginning of the year, went back below the 50-day moving average, came up, and that fractal, that comparison was starting to weigh on my mind. And with all of the talk about a recession coming, and there's a lot of stuff going on with the 4-week Treasury bill and the plumbing of the financial system, I got worried about that this could actually be another second leg on the crash that was driven by the traditional financial system. Since Bitcoin has been so correlated with stocks, the threat was rising that we could see something like this. But over the last 24 hours, with this big bounce off of the 50-day moving average, it's a huge, huge sign of strength. And so that threat now has gotten less. It hasn't gone away per se, but it has gotten quite a bit less. So really, I'm watching this 50-day moving average. This is super, super important for Bitcoin to hold. And I mean, this is pretty fantastic. Let me go to read exactly what I said in the report about this. Again, this is from the Market Pro letter over there on bitcoinandmarkets.com. It will be a good sign. It would not be a good sign to break the 50-day moving average, and there is a legitimate threat that it could repeat some of the behavior from when price broke below the 50-day after the all-time high. This is unlikely, but a threat you should be aware of. Holding the 50-day will be a big bullish divergence from all the comparisons I've made above. So this is a huge bullish divergence from those fractal patterns. I think that is super, super significant. And when big money is looking at this market, they're going to see things like this. 70% up for the year, holding the 50-day moving average, first holding the 200-day moving average, then holding the 50-day moving average, and accelerating higher. I think this is going to be a big win. Also, a lot of people were getting bearish and getting into their shorts once again down here at 27,000, and we have some more shorts to squeeze. Okay, that's enough on Bitcoin. Let's take a look over to the Ethereum price, and we will be talking about altcoins with Gary Gensler here. Let me zoom out. This is the ETH BTC chart, and it is not as important as the ETH USD chart nowadays because a lot of the volume is against Tether, or against these USD stablecoins. But this one is still important. You can see that very recently we have been bouncing off of the 200-day in orange, and the green 50-day moving average has also been resistance a couple times. I'm going to share this. Here you go, Telegram. And I have labeled these forks. So we had the merge back here. What day did that happen? The 15th of September of 2022. And then the Shanghai fork was on, I think it was the 12th of April. It might have been the 11th of April, but it was right here in this most recent dip. And a lot of people, including myself, were thinking this is going to be a sell the news event. However, it did dip into the fork and it was bought up. Now, is that exit liquidity? Were whales pushing the price up slightly so that they could dump into some exit liquidity? Perhaps. That story fits quite well right now because we do see ETH falling off compared to Bitcoin. Very interesting as well to look at the activity in this chart since this new Gary Gensler video has emerged. So let me take these moving averages off. Really has not affected the price of Ethereum. I think a lot of people in Ethereum are nervous that it is a security. There's a lot of language in some of the recent court filings from the SEC that would include Ethereum. So I think people are starting to really think that this could happen in the near future. Okay, so that's enough with Ethereum. Let's go into the dollar. Let's go back to the daily. It's red on the day, but it's not terrible. It's not terrible. I'll share this with Telegram as well. I mean, for all the talk of de-dollarization, you would think that this would be near all-time lows or continuing to slide, right, against these other currencies. But let's zoom out. Let's go to the weekly and zoom out. I mean, we're still, is this on logarithmic? Yeah. It's still right at that COVID high. So out of the last, let's zoom out. So if we go back, keep zooming. We have to go back to 2003. Okay. How many? That's 2 decades, 20 years. So for the last 20 years, it has only been above the current strength of the DXY, the dollar index, against the major currencies for a few short months last year. Think about that. The dollar is stronger than it has been at any point in the last 20 years, except for just a couple months last year. Yet, what is the main meme out there is de-dollarization. It is crazy to me that people can look at this chart and say the dollar is in imminent threat of losing its status. It's getting weaker and weaker. No, it's not. Okay. If anything, the threat is the bigger threat to the financial system, guys, is a stronger dollar. And I've said this many, many times over the last couple years. I haven't said it in a while, but for the Fed to lose, if the dollar goes down, that means the Fed is winning. If the dollar goes down, people that owe dollars, they are able to service their debt more easily. So the dollar system will get more entrenched. If the dollar weakens, that is bullish for the entrenchment of the dollar system. As the dollar strengthens, it becomes harder for these people to pay their debts. The Fed would be losing as the dollar strengthens, not weakening. And the system will break more or sooner if the dollar strengthens. It's completely backwards from what people think. Since this is a credit-based system, as the dollar strengthens, the system is getting worse. As it weakens, the system is getting better. I hope that makes sense to people. Maybe I can go in on a different show and talk about that more. Okay, let's go to the 10-year. And I have a bunch of stuff on here. Let me just take these drawings off and go back to the daily. So it topped out still back here in October 2022. It is down. It is roughly in its happy place. It's sticking still around that 3.4 to 3.5 zone. If you're a listener of my content, I've been talking about this zone for a very long time, calling it the happy place for the 10-year. Really, what this is telling you, so longer rates tell you about future inflation and growth expectations. So 3.5%, maybe some of that is growth and some of that is the 2% inflation. But overall, the 10-year is not telling us that they're expecting a reacceleration in CPI. It's not telling us that there's going to be a reacceleration in growth either. It's telling us that throughout the next 10 years, roughly, the future growth and inflation expectations are running about 3.5%. And that is a post-GFC normal. So I've said this phrase over and over. Post-GFC normal is low growth, low inflation. The end of this system is low growth, low inflation, lower and lower growth, lower and lower inflation, and a grind. And in that situation, that feels like a depression. Emil Kalinowski has called it the silent depression. That people search for a monetary alternative, something to bring growth back. How long will that take? Well, first off, Bitcoin is that alternative for people. But with the demographic situation the way it is, it could take a generation until we start seeing some vibrancy in the economy. But people will be moving to Bitcoin in the meantime. All right, so that's the 10-year. Let's take a look at oil. I posted about this morning. It has pretty much closed the gap of the OPEC plus cuts. It nearly did. It missed it by a couple ticks. I shared this image with Telegram earlier this morning, so I'm not going to do this one. But you can see here on the screen the two OPEC cuts back in October and in April of this month. And the general trend for the price is lower still. It's still lower. Yes, there's news that the Strategic Petroleum Reserve is continuing to get drawn down. But there's backwardation, heavy backwardation in oil markets, which signals a ton of falling demand. So the path for oil is still lower. And this makes sense as well if you think about crashing CPI. We're going to get PCE, I think, on Friday, which is the Fed's preferred inflation measure. So we'll see what the March PCE was, but it's probably going to surprise to the downside. Overall, the price of oil, the interest rates, all of this just is screaming low growth and low inflation. Let's go to the stock market. Stock market is red for the day, but it's up above the close, yesterday's close. So nothing significant to report. It did break some of these lows from back here in early April, but again, nothing significant to report. It's generally in a bullish stance. That's the way I'm looking at this. And if there is more problems in the financial system with First Republic or some other banks starting to go under and there's plumbing issues, the chance of a pause by the Fed increases. And if there is a pause by the Fed, it's going to unleash some animal spirits in the market. And I think that the stock market and Bitcoin will rise. That will not fit the recession narrative. So we'll have to see how people handle that. But overall, a lot of evidence that I've pointed to in the last couple weeks of the stock market, how it performs against the inflation cycle and the business cycle in general, is saying that the bottom is in for the stock market and we are going up. All right, so that is that. Of course, is the U.S. stock market, not international stock market. So back to the Bitcoin chart. That's it. Let's get into Gary Gensler, and we're going to watch some of these videos. Share this tab. This is a story from Cointelegraph. I did share it already with Telegram, so you guys in there can check that. Headline is Gary Gensler links crypto with cash in viral 2018 video. Crypto Twitter reacts. It's really Bitcoin Twitter. Okay, let's get into this. The crypto community is calling out the alleged hypocrisy of Gary Gensler, the head of the SEC, after a 2018 video emerged of him stating that cryptocurrencies are on par with commodities or cash and are not securities. The video came from a blockchain and money class in the fall semester of 2018, taught by Gensler, a former professor at MIT, before he became chair of the Securities and Exchange Commission. On the topic of initial coin offerings, Gensler said that 3/4 of the market are not ICOs or not what would be called securities, naming the US, Canadian, and Taiwanese markets as the three jurisdictions that follow something similar to the Howey test. Quote, 3/4 of the market is non-securities. It's just a commodity, cash, crypto, Gensler said. All right, well, let's take a look at this video. I'm going to pull this up. Should be able to get it in this link here. Make sure I have my audio shared. Okay. And guys on Telegram, sorry, you won't be able to hear this, but I posted it just a few minutes before the live stream. So let's rewind this.
So we already know in the U.S. and in many other jurisdictions that 3/4 of the market are not ICOs or not what would be called securities. Even in the U.S., Canada, and Taiwan, the three jurisdictions that follow something similar to the Howey test that we've talked about, 3/4 of the market is non-securities. It's just a commodity, a cash crypto. So you'll hear debates about initial coin offerings and what's a security and what's not a security. Relevant and important debate. But for 3/4 of the market, it's not particularly relevant as a legal matter, as a regulatory matter. Brodish.
Okay, so let's continue on with this article. That was the video. He said pretty much the opposite of what he's saying today, but let's get into this a little bit more. When Gensler briefly acknowledged that ICOs may spark a securities debate, he concluded that 3/4 of the market is not particularly relevant as a legal matter. Several members of the crypto community were stunned by Gensler's remarks. Coinbase CEO Brian Armstrong commented a mere wow in response to an April 26th Twitter post shared by cryptocurrency researcher ZK Shark. And that's what we just watched. Eric Voorhees, the founder of crypto trading platform Shapeshift, asked, when does someone get arrested for fraud? All right. Sharmad, whatever. I'm bad with names. The founder of Web3 podcast Rug Radio called Gensler disgusting in a tweet to his 346,000 followers, while a systems engineer named JD called on the SEC chair to provide an explanation behind the change in opinion. Not everyone saw eye to eye, though. The U.S. lawyer Preston Byrne explained that professors and law enforcers work in different capacities and that Gensler shouldn't be held to the same views he had back then. Quoting from a tweet, I see a lot of people giving Gary Gensler a hard time over this, but it's important to note the different capacities in which he's speaking. As a professor, he can talk about what things are in the abstract. As a law enforcer, he's required to enforce the laws as they are written. Another U.S. lawyer, blockchain technology specialist Jonathan Schmalfeld, challenged Byrne's opinion, stating that Gensler's interpretation of the Howey test shouldn't change by virtue of his capacity. The response prompted a second explanation from Byrne. Quote, I mean, when I talk with clients about this stuff, there are three answers. What I think the law is, how I think the enforcers will interpret it, and what the law ought to be. Right now, he's limited to giving only one of those answers by virtue of his position. All right. And I do have another video that I thought would be interesting to check out. It is from a different time, I believe, in that same lecture. So now I'm sharing the Telegram. Here we go. Let's All right, so that is that video. I thought it was very interesting, this debate. First off, Gary Gensler, he has multiple different, I guess, like Preston was saying, as a lawyer, you're looking at a bunch of different things. And first off, he can learn. All right. So there in that second clip, he was saying that the SEC said that ETH was not a security, but it never said any such thing. It never said that. The SEC, a person speaking in an unofficial capacity, said that ETH was not a security. But the SEC never had an official position. it doesn't really have an official position on Bitcoin, even though the previous chairman has come out and said unofficially, he said directly that Bitcoin is not a security. So that's a little bit better than Hinman, or I think his name was Hinman, saying that ETH was not a security. But no, so Gary Gensler was wrong about that. So he learned something. He can learn throughout the last 5 years, especially becoming the chairman and learning about how the agency is viewing the Howey test and viewing these things. Plus, a lot has happened. There's a lot of different kinds of coins out today. It's pretty easy. Did a central party launch it? Are you dependent on them maintaining the network and upgrading the network? And do you expect a financial gain from it? If those things are yes, then it's a security. And with Ethereum, it's pretty cut and dry, in my opinion, that it's a security because it's never finished. It is, you are hoping that you were hoping that it would go to proof of stake. Now it's gone to proof of stake. Now you're hoping that it continues to get upgraded and fixed. You had to wait till you could unstake your commodity. No, you could unstake your security. So these things, he learns, he changes his opinion, and it's pretty darn obvious. Pretty darn obvious. Plus, when he's doing this at MIT, there's a lot of different influences on him there too. Maybe he is consulting companies, and he doesn't want to come outright and say, I think these things are securities, obviously. So he has to bend the truth there a little bit. Now he's a regulator. Now he's the enforcer, and he sees it differently. It's pretty crystal clear. But of course, all of the altcoin and the crypto bros, they jumped on this like it was a gotcha. Oh, see, gotcha. Now you have to say everything is not a security. Of course, that's not going to happen. Okay, so that is all I have for today, guys. Thank you for joining me. My name is Ansel Lindner. This was a very brief update. I do these live streams several times a week. So check out BTC Market Update on YouTube. Check out, follow me on Twitter if you're not at Ansel Lindner. The Telegram, t.me/Bitcoin and Markets. And the website is bitcoinandmarkets.com. You can support my content there financially, or you can just sign up for the free weekly newsletter. Those come out on Mondays. All right, guys. Thanks for joining me. See you on the next one.